Bitcoin has broken out tremendously, so this is going to obviously impact the Pi Cycle Top Indicator in a very big way. We're going to be talking about how that's going to impact things because we're seeing that these two Pi Cycle moving averages are lifting up, and that means a lot for the coming Pi Cycle crossover, but also in terms of this being a resistance, this being a support, and so much more. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy data science content like this going forward, and let's dive right into it. So when we look at this Pi Cycle moving average history, generally speaking, prior to the halving is when we see oscillation in and around this moving average. But as we go into the halving year, we tend to see fantastic retesting of this Pi Cycle moving average as a support all the way to new all-time highs. Same thing in 2019, you can see oscillation in and around this moving average, but once we get into the halving year, maybe one deviation to the downside below the Pi Cycle moving average, but generally speaking, retesting as a support, even deviating to the upside beyond this support and not actually retesting it until new all-time highs. So those are two really important things to note when it comes to the Pi Cycle moving average, because we are now transitioning into the halving year 2024. We're transitioning out from the pre-halving year of 2023, where we did see lots of oscillation and deviation beyond it, holding as support, deviation right over here, fantastic successful retest, as you can see right over here, picture perfect retest. And now that we're deviating and getting out of 2023 in 2024, the best we can hope for is a retest of this Pi Cycle moving average going forward. Deviations below it are going to be less likely. But what about the upside? When it comes to the upside, we've seen in 2019, for instance, rejection from this green moving average, and then another rejection right over here, but a much shallower and weaker one before finally breaking beyond it. And in 2016, in the halving year, we also got close to the green moving average right over here. Rejected quite harshly, but once we got back there, we broke beyond it quite nicely. So the key insight here is that when we are approaching the green moving average, we reject from there quite strongly on the first time of asking. On the second time of asking, it's a shallow retrace, if a retrace at all. And we've seen that in 2019 as well. Rejection, sharp rejection, shallow rejection on the second time of asking in the halving year. So if we do get close to this moving average right over here, then we will probably reject from there if we indeed get close to it on this move. Not a given. And if we do get close to it later down the line in the halving year, because that's where we could see a rejection. Once we get there in the halving year, then there could be a sort of pullback and then a recovery back into this moving average and then a break on a second time of asking. But going forward, where could we see a retest for the Pi Cycle moving average? Where could Bitcoin drop into and retest the Pi Cycle moving average? Well, that would be at 31K, which makes complete sense because if we look at this range high resistance, remember this was the range back in the day, range high resistance, range low support, and if we drop back into the top of that range high resistance just to turn it into a new support, well, there you have a Pi Cycle retest waiting to happen. Unlikely we'll get a downside deviation in the halving year right over here, because that is not what we see in terms of trend. Historical trend for the Pi Cycle moving average. In pre-halving years, yes, we do see downside deviations, but in the future, very unlikely. And if we do see one happen, it would go against history, but at the same time, it would represent a fantastic buy-side opportunity. But what about the upside? The upside is around 55K. Could we get to 55K this year? It's unlikely simply because we have a 4-year cycle resistance around 48K region, but 55K could be revisited in the halving year and could prompt some rejection. And then after we recover from that rejection, which could be quite deep, we could see another second revisit, and then we'd break beyond it quite comfortably. So at this point in the cycle, what do things look like? Because we have the Pi Cycle moving average, 111 days moving average here, which is representing 31K at this price point. We have the multiplier of that moving average, 350 times 2, I believe, as we can see here, 350-day moving average times 2, which is a multiplier. and we're seeing these two moving averages, they are clearly going towards the upside, especially this one. This one is the more sensitive moving average because it takes into account less days. As you can see here, the orange moving average, 111-day moving average, and that's much less days to take into account. As a result, it's more sensitive to moves in price action. We've been moving quite a lot in recent weeks, which is why this moving average is going to change very rapidly, very quickly, because it's highly sensitive to it. And this is going to be changing a little bit slower. But we have to understand that these strong moves aren't common in the past year, for instance. We generally had a lot of consolidation, very few breakout moves in general. And it's only recently that we've seen such a move up. And the reason I mentioned that is that this move up is really distorting this price cycle quite substantially. So if we do try to bring these lines and propel them into the future and try to come up with a date where we could see these price cycle moving averages cross over into a bearish crossover to mark the bull market peak, then we come up with December 2024. And the reason we have to take this with a pinch of salt, and in fact a bigger than a pinch of salt, is because we're going to see corrections in the market. And when we do see corrections, the slope of this price cycle moving average is simply going to change, and it's going to slope downwards, which is going to drastically impact this crossover and these propelled lines. The green moving average isn't going to be affected too much by the retraces, simply because it takes into account more days and is less sensitive, but it's this moving average that is going to be constantly changing along with the volatility in price action. So if we do see a rejection in the coming weeks, then we're probably going to tilt towards the downside, and then that would, as a result, change things quite considerably. Because small tilts can change the target date by a few months, and that's where the sensitivity of this price cycle moving average can be a problem when trying to come up with where could we see a bearish crossover in the price cycle moving averages occur in the future to denote a bull market top for Bitcoin. So really important to understand that these volatile deviations in price action are going to adversely and strongly affect this sensitive price cycle moving average. So we are going to see things really, essentially, the price cycle moving average is going to essentially suggest to us that we could even see maybe a bull market peak in September if things continue to the upside like this, because that's going to mean that this price cycle moving average is going to continue to drag up. And if we were to propel this moving average once again, then we could actually get closer to an October bearish crossover. So it's really important to understand that at this point in the cycle, these two moving averages are very wide apart from each other, and they're going to continue to be wide. But at some point, especially after the halving, this blue vertical line just showcases to us that then we're going to see these moving averages narrow and narrow and narrow with time until that crossover finally occurs. But in my personal opinion, I don't think we're not going to end the bull market in 2024 December. I feel like we're going to end it later in 2025, maybe September, maybe October, mid-September and mid-October, not in December 2024. And we're going to see further upside in Bitcoin, and then downside and consolidation, and then upside and pullbacks, and that's going to be impacting this price cycle moving average quite considerably. But in the meantime, I wouldn't worry about December 2024 being that ultimate sell side zone for the bull market peak. I feel like we're going to see this crossover change so many times in the meantime as we progress in this bull market. But subscribe to the channel just to stay abreast of these updates. Keep in touch and check out these videos just to be on top of the market, to know when to sell into strength in the bull market peak, because that's what we're going to be sharing here in these data science videos once this bearish crossover does occur in the future. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy data science content like this going forward. Check out the top right hand corner for more, and I'll speak to you in the next one. Speak to you soon.